Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we're looking for an ABC to the downside or a wave 1, 2 and then a wave 3 to the downside for lower prices to come. For a wave C, the most common target is between the 1 and the 1.236 taken from the high to the low of A to the high of wave B, giving you a target between 35.2k and 34.6k, which is in confluence with this blue box here just above around the 1-to-1, which is sitting between 35.2k and 35.4k. Now for a wave 3, usually the minimum target is the 1.618 over here at 33.784, which is in confluence with this blue support box between 33.8 and 33.9k. This scenario, however, does have lower probabilities compared to the scenarios that I will show in a second for numerous reasons. First of all, this move to the upside over here. If we look at this zigzag to the upside in an ABC inside wave B or wave 2, then we have a problem with this wave C over here. Now if we look at wave A, then we can look for a diagonal, nice. Wave B, a zigzag, that's fine. But then we have this wave C and then a 1, 2, 1, 2, 3, 4, 5, 4, wave 5 to the upside, end of wave C over here. However, if this would have been the high, we want to see an impulse to the downside. Instead, we got a 3-wave, a 3-wave, and potentially a 5-wave in maybe a flat A, B, C. Also, if over here this would have been a wave 5 to the upside, you want to see a 5-wave structure to the upside, but this looks clearly like a 3-wave structure, which is not how you want to end this wave C towards the upside. Also, if this is the high of a wave C, it just missed out on the common target area for a wave C, which is between, again, the 1 and the 1.236, taken from the low to the high to the low over here, which also lowers the probabilities of this particular scenario. And then finally, we also have to look at time. If we look at the length in time of this wave B or wave 2 compared to this wave 1 or A, you can see that this move up is incredibly long in time, and Elliott waves, besides having a price relationship, also have a time relationship. Now for a wave 2, most commonly you want a wave 2 to be longer than the 0.382 fib time taken from the high to the low of a wave 1, which then over here gives you this area. It's literally like the second candle positioned next to the low, which is of course ridiculous if you look at this whole length in time. But currently, this high here is 17 times the length of this move towards the downside. So this wave B or 2 is 17 times longer than 1 or A, which is kind of unheard of, right? Like for a wave 2, usually like the maximum target is the 2 or the 3 fib time, and for a wave B, the 3 fib time, 4 fib time can be the max, but 17 times really lowers the probabilities of this scenario. And even if this would be the high of C and this is your wave 1 to the downside, then again, this is already a very long sideways corrective structure, which also again lowers the probabilities that we have a bigger impulse to the downside over here. Now the invalidation of this scenario is if price moves towards the upside and takes this high at basically 38k. If we then go at the micro bearish but then eventually bullish scenario, we are expecting a move towards the downside, but then we are looking for a bounce for continuation to the upside in a wave A, finished 5-wave structure, WXY to the downside in B, for then a wave C to the upside. And this also fits a bigger diagonal to the upside, which you can see over here shortly, and then a wave 1, 2, 3, 4, 5, eventually looking for this wave 5 to the upside, which then also is a 3-wave structure in then an A, B, C. Now in this particular scenario, we are then looking for this to be a wave 1, this to be a wave 2, then a 3, 4, 5 to finish wave A over here, for then a W flat, wave X in a zigzag, and then a wave Y to the downside, preferably a zigzag or a triangle, because wave W is a flat, so wave Y cannot be a flat, and it can only then be a zigzag or a triangle. But then I would be looking for a zigzag to the downside for 2 reasons. First of all, from this low, if you pull a fib from the low to this high here, then you can see that the 886 has been touched numerous times, increasing the probabilities that price eventually takes this low, these lows over here. And also we have some nice support around the 0.5. So we have this target box here between 36.5k and 36.6k with a couple of interesting confluences, including the point of control of this little range over here, the 0.5. We also have the full range value area low over here as well, which is quite nice. So there's a couple of confluences which are quite interesting, and for a wave B, the common targets for a wave B are between the 382 and the 886. So the 0.5 or the golden pocket to 0.5 area is absolutely fine for then potentially the low of a wave Y, and then continuation to the upside again, looking for a wave C, where if this wave C is going to end somewhere inside this target box, somewhere around the 0.5, then the target for this wave C will be here around this 1-to-1 and 1.236, which is between 38.3k and 38.7k. And what is interesting is the golden target box again, with this target box sitting between 38.5 and 39k, which is impressive resistance. So this scenario would lead to price going towards that golden target box and then eventually rejecting there for a bigger move towards the downside. What you can also see is that currently price is rejecting at my key line, and this is a line that during the stream earlier today I put on my chart. One key line over here and also one key line down here, which were basically the 2 point of controls, and I said these are my 2 areas of interest. This over here, this key line at 32.725 or 258, sorry, was the point of control of this little structure. And this key level is the point of control of this structure over here. Now, the first one has been hit very nicely indeed, rejecting over here for now, at least for now, a move towards the downside, where still this one is interesting and additional support for then a bounce towards the upside. Now, in the more bullish scenario, we are first looking towards the upside over here. So in this scenario, we are then looking for this to be a wave 1, 2, but then this is the high of 3. Then we have a flat in a wave 4, where potentially wave 4 is already finished, or we get a WX, and now we get a triangle in a wave Y. So then wave 4 becomes extended for then a wave 5 towards the upside, where then we're looking for wave 5 to end somewhere inside this wide box, which is between 37.6k and all the way up here, the 1-to-1, 38.1k. Now in this scenario, what is important is that so far price has not crossed this line over here. As you can see, there is no overlap between the high of wave 1 and the low of wave 4, because so far price did not touch this line over here, right? So it's still okay for a wave 4. However, if we are looking for a wave 5 to the upside, then preferably I'm looking for a WX and then a wave Y, because if this is the low and this is your wave 1, 2 continuation in a wave 3, well, this wave 2 retraces to the 886, which is a rare target for a wave 2, but a common target for a wave B or a wave X. And the fact that the 886 has been hit means that any move towards the upside has a higher probability of being a wave C or a wave Y, which therefore increases probabilities to then take these lows. So preferably, if we think about a WXY or at least a corrective structure in a wave 4, I don't like wave 4 to end here. I would then prefer to see a triangle over here finish for then a move towards the upside. But at the moment as it stands, probabilities in general are higher to at least take these lows once more before a move to the upside, either in a 5, then move down and then up, or preferably actually seeing a move down instantly, go to support, and then look for potential support for a move towards the upside. I already spoke about these confluences over here, but I just want to highlight them again. This was the resistance, point of control. This is main support over here. If you lose this target box sitting over here, which is again between 36.5 36.7, then one could imagine looking for lower prices. You do have the golden pocket in confluence with this low over here at 36.3k, so that could be still a potential support area where you wick the low, close above, and then move towards the upside. But this is the first area of support towards the downside. Now, if you then look at the CVD divergences, then at the moment it's all green. Bullish CVD divergences over here. This is a little bit like not the best CVD divergence. These ones over here. Now, this one, by the way, already played out, so I should actually remove this from my chart. But this second one, this one over here, price moved up, but CVD constantly moved down, so it did not even move up with price towards the upside, which is not preferred for CVD, so more locally gets priority. And this bullish CVD divergence already played out with the highs being taken, and we also have this one over here. If I go to the CVD chart on the 15-minute, then you can see over here higher low in price, lower low on blue, eventually move towards the upside, highs got taken, very nice indeed. And here at the moment you do have a higher low in price, but if you look at blue again, you have a higher low in price but a lower low on the CVD. So you also have some bullish CVD divergences on blue, but on the 5-minute on yellow it's bearish again. So it's a little bit of a mix at the moment, and that is also why on the chart I don't have any lines except for this one over here, but also this one now, you know, like yes, it is a bullish CVD divergence, but you do also have more locally bearish CVD divergences, and the more local CVD divergences usually get priority. So we have to wait and see how that is going to pan out. If price moves up, it basically invalidates the bearish CVD divergences. If price moves down, well, simply the bullish ones are invalidated. We are, for now at least, at resistance over here. If we then finally look at the probabilities of the different scenarios, then currently the highest probability scenario of the three would be to see a move to the downside to support, which then initially would be the blue box here for then a move towards the upside. On the second place, it would be this move, seeing a move towards the upside, and then like for a wave 5 and then a move towards the downside. I just want to highlight that for the bearish and bullish scenario, you can still have a move up and then a move down, but preferably not take this high, right? So you can have a W, a longer X, and then a wave Y to the downside, but it just means you're basically going to move down first before moving to the upside. In the bullish scenario, you're going to move up first before then a move to the downside in B and continuation in a wave C. And then on the final position, the lowest probabilities would be continuation to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.